Groves at Movement Mortgage. And frankly, I'm just doing this kind of as a test because we're using a new platform, Restream, which allows us to restream a video across several platforms, whether it's Facebook, LinkedIn, YouTube. We're trying a bunch of stuff. So you might be watching this on YouTube, where you know me as Scott Groves in the Mortgage Mysteries videos. You might be watching this on LinkedIn. You might be watching this live on Facebook, on a business page, on a whatever. Do me a favor, just so I know that this thing's actually working. Can you leave a comment or click the little likey button so I know where this was restreamed to, and then like kind of what's going on and if the platform is actually working, because it looks like 5 of you are watching live and I really appreciate that. By the way, for all you compliance hounds out there, my NMLS number is 365178. I work at Movement Mortgage. You can email me at scott@scottgrovesteam or scott.groves@movement.com. Okay, compliance out of the way. So what is going on with rates and mortgages? Well, basically, as many of you know, mortgage rates have gone up every day since Christmas of 2021. We're currently in June of 2022. It looks like rates have leveled off around 5.5%. And look, we could blame Trump, we could blame Biden, we could blame the Federal Reserve. I would tend to blame the Federal Reserve. They seem to not be nearly as smart as they think they are. But, you know, not that these things are exactly causal or there's not a causation, but with everything that's going on with inflation, the economy, kind of just everything that's happening, it kind of makes sense that maybe the stock market would do something cyclically and the mortgage rate market would do something cyclically, right? The stock market doesn't always go up. Property values don't always go up. Interest rates don't always go down. We've basically been in like a 40-year bear market cycle of interest rates just coming down and down and down and down and down. And now we're just in the opposite of that cycle, which is interest rates are creeping up. You know, housing prices feel like in some areas they've kind of leveled off. I have a home in both Los Angeles, California, actually Valencia up by Magic Mountain, and one in Henderson, Nevada, which is right outside of Las Vegas. And for the first time in 12 years, I'm starting to get some Redfin alerts and some property alerts that that values are decreasing or that properties are taking price cuts, especially some of the properties that aren't super special in that like $900,000 to $2 million range. We're starting to see those not move as quickly. And I'm definitely not saying it's a buyer's market yet. I'm definitely not saying there's like deals out there to be found, but I'm almost absolutely certain that we've kind of seen some type of plateau, right? Or leveling off. So do me a favor. Again, I'm trying this new platform called Restream. If you're watching this anywhere, Facebook, LinkedIn, YouTube, leave a comment, click a little button. I appreciate it. So where are mortgage rates, right? Currently, and by the way, the best website to go to is Mortgage News Daily. I'm looking at it right now. Mortgage News Daily is the only website that I have found that is not ad driven or isn't trying to recruit you to a mortgage company or isn't trying to sell you something. It's the most honest representation of what rates are doing. So if you're a loan officer or a realtor out there who's looking for something to send to your clients without it being all clickbaity and giving like super low interest rates that actually aren't available in the marketplace, then do me a favor, go to Mortgage News Daily. You know, it's showing that the average 30-year fixed right now is 5.48%. That's kind of your conventional loan, which in most areas that I service, kind of the high balance areas of Southern California, conventional loan will go up to $970,000. If you're in non-high cost areas, so maybe you're out in like San Bernardino or Riverside County in Southern California, or maybe you're in Clark County in Nevada, the conforming loan limit is $647,200. So basically, more expensive, wealthier areas, you can go up to $970 on a conventional loan. On the San Bernardino, Riverside, kind of lower cost or moderate income housing areas, you can go up to $647 on a conventional loan. These are basically the loans that the government will back and insure. Once you get to jumbo loans, so in those kind of healthier, more expensive markets, jumbo loans going to be anything over $970. In those more moderately cost areas, anything over $647 is going to be a jumbo loan. What's interesting is that pretty much across the board, jumbo loans, meaning loans that aren't backed by the government, loans that sit on the balance sheet of individual lenders like Chase Bank, JP Morgan, Redwood Trust, these hedge funds that finance big portfolios of loans. Jumbo loans for the first time in a while are actually cheaper than the government loans, right? So government-backed securities, whether it's VA, FHA, conventional loans that go to Fannie Mae, Freddie Mac, their average rate right now is like in the mid fives. FHA loans being a little bit cheaper, but your average jumbo loan across the country, all service providers, again from Mortgage News Daily, shout out to them, is running today at 4.73. Now, some people might ask, like, well, a jumbo loan where there might be more risk because the property value is higher, they're lending more debt. Why in God's green earth would that be cheaper? Why would it be cheaper to borrow private money from a bank than it would be to borrow money that's secured by the federal government with more homogenized guidelines? Well, two reasons for this. One, a jumbo loan is harder to get, quite frankly. A borrower needs more skin in the game. They got to jump through more hoops. They have to show more paperwork. They have to have more reserves in the bank. I mean, the reality is these days, you've got a $300,000 loan for a veteran or somebody that's using a program like an FHA loan. They can have marginal credit. They can get 100% of their down payment on gift funds, or a VA loan doesn't even require a down payment. You can close some of these government-backed loans for clients that don't have two pennies to rub together after the deal closes. On jumbo financing, it's much different. These lenders are playing with their own money. That debt sits on the individual balance sheets of CIT Bank, Wells Fargo, JP Morgan, Chase. So not surprisingly, when they're playing with their own money, they require more stringent guidelines, which means when they have a better pool of borrowers, wealthier borrowers, borrowers with more reserves, borrowers with better credit scores, they can lend out money at a slightly better rate. So kind of counterintuitive, but the rich get richer if they can qualify. Jumbo loans are priced a little bit better than kind of your traditional government backed securities, right? Fannie Mae, Freddie Mac, VA, FHA. And, VA and FHA, they tend to, because they're fully backed by the government, not just like the fake government entities of Fannie and Freddie, they tend to have rates a little bit lower. Mortgage News Daily showing they're averaging around 4.88. So I would say, when I'm pre-approving a client right now, I think we've kind of tapered off. We're approving our clients with an interest rate of like 5.5%, just so that there's no bait and switch, no confusion, no frustration once they actually get under contract a week, a month, or a year later. I got to tell you, when things first started rising, people thought I was crazy for putting pre-approvals in at 5% back when the interest rates was 3.99%. But I was telling my realtors and my clients, I'm like, look, if you get a house today, if we can lock in the interest rate, yeah, you'll get 3.875, 3.99, 4.25. But what we need to be mentally prepared for when we're doing the pre-approval, and what I want you to be comfortable with on a monthly payment, is a rate somewhere in the 5.5% range. I started telling people that in January or February because I rather estimate high during the pre-approval process and give my clients kind of worst case scenario for what the rates could be by the time they actually get an offer accepted, versus doing this bait and switch thing that so many lenders do, which is advertise an insanely low rate. Then the client gets their offer accepted and boom, they find out their payment's a couple $100 more expensive because the market has moved against them. Well, when the market's basically rising every day for 6 months, you can kind of just assume the market's going to move against us. So much longer than I planned to go, but it looks like this new software worked out and I'm a big fan. I'll see how it looks on the various platforms, LinkedIn, Facebook, YouTube, things of that nature. But if you have any questions about getting pre-approved, right? If you're a consumer, if you're watching this directly, you're thinking about buying a house, give us a call. We will go through, actually, one of my team members will go through and put a link to our Calendly where you can schedule some time with our team in order to just talk to us, like just 15 minutes, talk about what's going on. We'll talk to you about what we think about housing prices. We'll talk to you about getting pre-approved. Maybe even though rates are higher, you need to refinance because you've got to take some money out to pay off other debt or kind of shore up the finances in other areas of your life. So if you need anything on a mortgage, whether you're a consumer or if you're a realtor and you're kind of working with a loan officer who doesn't know how to explain this stuff, we need to have coffee. We need to have a Zoom meeting. We need to have a conversation. Specifically, if you work in the Vegas area or the greater Los Angeles area, those are the two areas myself and my family are kind of always back and forth to. I would love to meet up with you, do business with you. Look, we make mistakes. We're not perfect. I don't have the best customer service in the history of the world. But what I do know is that after 22 years of doing this business and approaching like 1.3, $1.4 billion in total loans funded, I've had a lot of conversations with clients. I have a good grasp of what's going on in the mortgage market. I can talk to your client intelligently and calm them down to let them know, hey, here's what's going on with rates. Here's what's going on with property values. Here's why this is still a great time to buy, right? Because the bottom line is you're paying a mortgage, whether you know it or not. It's just a matter of, are you paying your own mortgage or are you paying somebody else's mortgage by being a renter, right? You got to have a place to live. No, if we were talking about buying investment properties in Vegas or, some outlying areas that aren't in like major metropolitans, although Vegas is now a major metropolitan, I might be a little bit more concerned, right? This is how a lot of people got into trouble in 2007, 2008 by overextending themselves. But the reality is you've got to live somewhere, right? You're going to be paying something. So maybe it's a little bit more expensive to own than it was 6 months ago. It's definitely more expensive than it was 10 years ago because property values are up, but you're probably also making some more money, right? There's tons of buyers out there that are still trying to buy houses. So I don't think we're going to see any major correction in the real estate market anytime soon. Just feels like it's plateauing a little bit, which is great. That should be more buyers can get into the market. So these are my thoughts. If you stuck around, do me a favor. One, just for my own narcissism that I know that somebody watched this, and two, so I can see if this platform's actually working. Can you do me a favor? Leave a comment on LinkedIn, leave a comment on Facebook, leave a comment on YouTube, wherever you found this. If you need anything, Scott Groves team, you can Google us. You can email me at Scott's team. The team going behind me on all the places we live stream this video. And yeah, awesome. We will be available to help you if you need financing, or if you're a realtor and you need a team of absolute pros to talk to your clients, get them pre-approved and get them closed on the escrow or the contract when they're trying to buy a house. We're here for you. Love you lots. Thanks so much.